Welcome back to Stuff About Money They Didn't Teach You in School. I'm Xavier Angel, certified financial planner, and I'm joined today by my co-host, Erik Garcia, certified financial planner. How you doing today, Erik?
Man, I'm good, dude. I've been grinding it out like you. I have been tapped for carpool duty. Our normal carpool people all got COVID. So both girls, both their carpool drivers, their families got hit by COVID. So I got pulled into full service the past week and a half. And I'll tell you what, I was complaining about it initially. And then I realized that, man, it has given me a lot of really good one-on-one time with my daughter that I'm thankful for. I was reading something recently about as your kids get older and they go off to college, you'll spend the numbers. I don't know the exact numbers, but it was ridiculous. It was like you spent 50% of your time already with your kid, or 80% of the time with your kid that you will spend with them face to face after they go off to college. And it kind of hit me hard, like, oh my gosh.
And
So
these are times that they're not going to forget. You
yeah,
know, I was talking to an individual this morning walking Grace up to school. And so it's been 8 years now. For 8 years, I walked Grace up to the front of the school. You know, I get a hug, I get a kiss. We have these great conversations on our way to school now. These are the moments that we have to cherish with our kids.
yeah. So I told myself, stop complaining. Take, if have to work a little extra at night or whatever, this well worth it. Man, think about that. It was some
Mhm.
crazy stat. Like by the time your kid goes off to college, you've spent 80% or 50%. I think it was 80% of the time that you will actually spend with them, you've already spent by the time they're 18.
Yeah. Well, think about it in terms of Josh, right? So, for those that don't know, Josh is Erik's son. This is his first time. He's a freshman at LSU,
Mm-hmm.
and Erik and Jen dropped him off 3-4 weeks ago now.
Something like that. Yeah.
So, you know, if you think about the little bit of time that you spend with him now versus what you have over the past 18 years,
Yeah.
time flies.
Yeah. So
So,
people, we're not talking about relationships with kids, but your relationship with your kid is more important than your bank account. So make sure you get everything out of it. Fight for that time. Fight for that time with them. What are we talking about today? Yeah. Oh,
so Erik,
real quick. Hold on. Before we get to our
yeah,
topic, I want to encourage y'all. If you like what you're listening, go follow us on your favorite podcast listening app. Also, check out our YouTube channel. So we are we're posting the video, obviously, but we're also posting shorter snippets of the podcast that is getting a lot of traction. It's exciting to see people listening to what we're saying out there, what we're putting out there. But check that out because there's going to be some good videos that are not on that are not part of this podcast. So you can follow us on social, you can follow us on YouTube, and certainly follow us on your favorite podcast application. All right, Xavier, where are we going
okay.
today?
So before we go that route, I've got a question for you, and it's a question that we ask all our guests when they come on our show.
But I'm not your guest.
What is one thing you wish you would have known about money 20 years ago?
Me? One thing I wish I would have known about money?
What is one thing about money that you wish you would have known 20 years ago?
Oh man, there's many things, but I would say this. Don't try to accumulate in 5 years everything that my parents took 30 years to accumulate.
That's great. That's great advice. So
yeah, I think oftentimes we we come out of college, we live in this culture, we see things, we see all the nice things, everyone's building their forever homes really really young, they're driving nice cars really young, they're taking really nice trips really young, because that's what we see the generation above us do, and realize, man, some of those people worked really hard 20, 30
right.
years to be able to afford some of those things, and the longer we postpone those things and save, I think the better off we are as we age. Anyway.
Well, you got me on that one. I wasn't expecting that.
I wasn't expecting you to ask me that question because I'm not a guest.
But it's a great lead into what we're going to be discussing today. Today, you know, we've got 3 main topics that we're going to cover. One is, should you hire a financial advisor? Is a financial advisor planner worth the cost? And then the third piece that we're going to talk about today is, you know, when is the right time? When is the right time to reach out and seek help or get an advisor to come in and work with you? So those are the 3 topics. So
Yeah. So I think we're gonna hit those three kind of in the conversation, and really the conversation is centered around three specific reasons, right? You should hire
Right. Correct.
a financial advisor.
Correct.
Okay.
Absolutely correct. So, one of the questions that we've heard people talk about on a regular basis is, or issues that they talk about is, they're tired of doing it themselves.
Mhm.
They're tired of going out and investing and planning and creating strategies on their own. Either that, or they just don't want to do it themselves anymore.
Yeah. People
So,
don't have time
right.
to do financial stuff on their own. Right. Yeah.
Right. We're in that environment now to where, especially if you have kids. I know for myself and my family, we're always running. We're always busy.
Yeah.
Um,
So yeah, you just don't have time. You don't have time to make financial decisions on your own. There are those people who, I mean, how many people do you know, and how many of you listening hire someone to cut your grass? Hire someone to clean your house. Now, I'm not comparing the grass cutter to a financial planner. I think what we do is a little bit more complicated and technical, but the idea is, you just want to delegate it to somebody else. That's a really
correct.
good reason.
And it goes back to a lack of time.
Yep.
You don't have time getting out, especially here in New Orleans. The past several months, it rains every afternoon. It's raining. So to be able to go out there and hire someone, it eliminates one of
And
those
you cut your
additional
own grass.
chores.
You cut your own grass. You don't hire
I,
anybody.
I do, but on a Friday, I can go home early and I can get it done before the rain comes.
Is that where you go on Friday?
That's where I disappear to.
Yeah, so that's one reason you don't want to do it yourself. Also, kind of in that same camp, you have the people who want to delegate, but then I also come across a lot of people who come to me who I would say are fairly competent making financial decisions, but they lack confidence and they want validation. They want affirmation or confirmation that they're making good decisions or they're headed in the right direction.
Right. Absolutely. And I'll tell you, when I go back and look at where we are, where Plan Wisely is, one of the reasons why I made the decision to partner with you back in late 2019, early 2020, was because of what Plan Wisely and Erik Garcia was bringing to the table and making accessible to everyone. Financial planning. The goal, when we started talking back in 2017 about merging and coming together, one of the pitches was financial planning needs to be accessible to everyone without having to purchase a product or a tool or a service.
Unpack that. You said without having to purchase a product, tool, or service. What do you mean by that?
So in my prior life, in order to come in and really do a financial plan, one of the things that I was doing was looking to make a sale. I was going to sell you life insurance. I was going to come in and I was going to do your rollover or get you to invest money. And then I would sit down with you and I'd do a financial plan for you.
So let me clarify something. Okay. So there's nothing necessarily wrong with, because that's the path that I came from as well a long time ago. And there's nothing necessarily wrong with that. But what you're saying, what I think I'm hearing you say is the relationship was initiated on the potential sale of a product or an investment.
Correct. Correct. Okay. You're correct. Right.
So the financial advice outside of that specific issue that you were coming in to solve with your product was ancillary and not central.
Correct. You're absolutely correct. And fast forward to 2022, where we are now, making those financial plans accessible to everyone is I mean, it brings so much more value, because now I don't care if I sell you life insurance, if I do the investment piece.
Yeah.
The goal is really to put together a strategy, a plan in place for you, and for you and I, for Erik and I, to become accountability partners. And so that's the benefit of working with that financial planner, or financial advisor, is we now become those accountability partners.
So traditionally financial planning was accessible to high net worth individuals, right?
Correct.
Like I still remember sitting down with clients who had just met with a financial planner. This was before me becoming a certified financial planner. and them showing me this beautiful, 2-inch thick report that they paid sometimes $3, $4, $5,000 for,
Right.
and then to see them not do anything with it, I'm like, man, that is wasteful. And how can the average person start to access good advice that they're going to actually start to implement? And that's kind of, I think, what you're talking about here. The way we make it accessible is that we don't charge a very huge upfront cost. We have a very modest upfront cost, and then we charge an
Mhm.
ongoing, for lack of a better term, subscription cost. The same way you're going to pay for Netflix or your cell phone bill, you now have access to ongoing financial planning. So those are for those people, right? We talked about the delegators who don't want to do it, the validators, those people who like to have the confirmation. Now, let me pause real quick and say this: there are some people who don't, who do want to do it alone, and maybe
Mhm.
some characteristics. Let me lay out some characteristics of some of those people real quick. So maybe you're someone who you really enjoy reading and learning about finances. That I have friends who love reading about personal finance. Maybe they're equipped to make their own financial decisions. Another characteristic is you have time to review your situation, or you make
And
the time.
time is big, because you have to have time, and in order to come in and begin to read and put those strategies together for yourself.
Yeah, especially make the time, right? Some people
Right.
might have the time, and we waste a lot of time in our lives as individuals. But am I going to make the time to review a very, very, very important part of my life, my money, that impacts everything
Mhm.
that I do? So you got to be willing, you got to like learning about it, and you got to be willing to put the time in. And you have to be comfortable making financial decisions. I mean,
Right.
making financial decisions is really uncomfortable with people, particularly if they have big consequences. And I would
Mhm.
say a big one is you have to be able to tolerate uncertainty.
That's
Have to
big.
be able to tolerate. You have to be able to stomach uncertainty on your own. We
So,
see that right
Eric,
now. Go
right.
ahead.
Unpack that for me. I'm use
Unpack
your
that.
phrase there. Unpack that for me. What do you
I
mean by
hate that term. I actually, and I hate the fact, and I've got a friend, if he listens to this and he hears me use that term, he is not going to let me live it down, because he speaks regularly and he uses that term, and I rag him all the time. So let me explain that to you, Xavier. Um, Uncertainty. We're going to talk a little bit about this later on in the podcast, but uncertainty, like right now, we look around and the stock market is uncertain, the economy is uncertain. How we have to, if we're making our own decisions, we have to be able to look at that uncertainty of the future and look back to the things that we know to be certain from the past, that we have a reasonable expectation that they're going to, that the past will, the history will kind of repeat itself. The economy is going to recover. There's not going to be any talk about recession. These individual stocks that I'm invested in or my portfolio is going to recover eventually. I got to be okay with
Mhm.
uncertainty if I'm making my own decisions. And then the final thing is you have to be able to understand and keep up with taxes and retirement plans. That's a big one.
Right.
And if you're not willing to do, if those 5 characteristics don't represent you, you're probably wanting to hire um, someone that you're not going to do it yourself. If you are doing it yourself and you're tired of keeping up with all that, you're going to want to hire a financial advisor.
Mhm.
Or you don't want to do any of that, you're going to want to hire a financial advisor, because money's a fairly important part of our lives.
Now, Eric, sounds like you're talking a little bit about finances from a behavioral standpoint. And we talked a little bit about this offline. And some of the reasons why you need to work with someone, an advisor, a planner, is because of those behavioral finances.
Yeah, we're going to get to
And
that. We're going to get to that.
yeah, I'm jumping the gun there, huh?
I'll unpack that for you. Air quotes. Unpack. Yeah.
Okay.
So first reason to hire someone, right? You don't want to do it yourself, or you're tired of doing it yourself. Second reason to hire a financial advisor is your financial life has just gotten complicated.
Hectic.
It's gotten complicated. I got a call once. This is from a friend, and it was an email, and then followed up by a call, and they were in their middle. I would say they're in their middle 30s. Their comment to me was, "Hey, I think we're just ready to start adulting."
Mhm.
Right? Here's what happened. They had 2 young kids under the age of 5. Two decent incomes. They were making good money. One was a business owner. So all of a sudden, life is getting complicated. You know, you're hitting a stride in your career. You've got kids. I mean, just you're serving on boards. You're operating a business. Like, man, oh my gosh, I once was that person who enjoyed reading about personal finance, and I was that person who was okay with uncertainty. Now I am faced with uncertainty from every single angle,
Mhm.
and my life is just complicated. And I need someone with expertise, because here's the thing. Listen to this: the more complicated your financial life gets, the cost of making a financial decision, a bad financial decision, increases. So the cost of financial mistakes increase the more complicated your life gets.
And I think I saw a number, a percentage, for those who work with a financial planner tend to save about 134% more than
It's
an
100,
individual.
yeah,
What is it?
it's 143,
134%?
it's 100, it's
143%.
143%. Yeah, that's a good
So,
point. So as your life gets complicated, right, there's your money starts to get pulled in multiple directions. Like if you have multiple kids, right? You have one kid wants to do this, one kid wants to do that, your wife wants you to do this, and all of a sudden you're getting pulled in multiple directions, and it's really hard to 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 uh, to spread yourself out that thin. The same thing happens with our money. I got to save for college. I got to save. If you're in New Orleans, I say you're worried about college. You need to worry about high school, or
right.
forget that. You might need to worry about kindergarten. It's so expensive. So your money's getting pulled in this direction for kids. You got to save for retirement. You're trying to pay off student loan debt. You're trying to pay your mortgage. You know, you want to take a vacation next year. So your dollars are getting pulled in multiple directions. So the value of sitting down with someone to help you make decisions on where to allocate your dollars, because it's complicated, right?
Yeah.
How do I sacrifice my retirement for kids' college? Or man, I'm gonna feel guilty if I sacrifice kids' college for retirement. So it gets
Mhm.
complicated, man. It gets complicated. And again, the cost of financial mistakes increases the more complicated it gets. And here's the thing. I learned this from I'm not a very good golfer. I played, I think, like 3 times since COVID. All right. There was a time where I played a lot. And I remember playing with somebody, and they were not an impressive golfer. Okay. Like you wouldn't sit there and watch them and think like, wow, they're really good, but they scored really low. Um, they scored lower than you would have thought that their score should be. And I realized they scored low, not because they made a lot of great shots. They didn't make a lot of bad shots. And I think it's similar with our money. I've been thinking this through for a little while now, that we're more successful financially. We don't have to hit home runs financially. We don't have to make great financial decisions. We need to minimize the bad decisions. And when we can minimize our bad decisions, there's a better chance of us being successful. I can have one really, really, really good stock pick and make a lot of money. But if it's
But
coupled
you
with
can
10
have,
other, yeah, if it's coupled with
yeah.
10 other bad picks, I'm not getting ahead. I can have I can have 9 mediocre stock picks and one bad stock pick, and I'm going to be far better off than if I had one great stock pick
Mhm.
and 9 bad ones. So the cost, as your financial life gets complicated, the cost of mistakes increases.
Right. Absolutely.
All right. So we talked about 2 reasons to hire a financial advisor. Number one, you're tired of doing it yourself, or you just don't want to do it yourself. Number two is that uh, life has just gotten complicated, particularly your financial life. And then the third one, and I would say this is probably the most common and the most
I would
important
agree.
one,
I would
is,
agree.
you would agree? I haven't even,
I would agree.
do you even know what I'm going to say?
I know exactly what you're going to say. You need
Okay.
someone to talk to about money.
You need someone to talk to about money. That's right. Third one. I just need someone to talk to about money. I've gotten more calls from prospects or friends who know I'm a financial planner, and the conversation typically will start something like this: "Hey, I don't know exactly where to find information on this, but do you know anything about X, Y, and Z?" Got a call the other night from a friend, business owner, not a client. He says, "Hey, look, I haven't told anybody about this other than my business partners." And he actually works he actually works with another financial advisor who did his life insurance and set up an IRA for him. Um, he calls me and he says, hey, I want to run this business idea by you. I haven't talked to anybody about it. So he saw the value of talking to a financial planner about a business idea. He didn't even go to his financial quote unquote advisor to talk to him about it. So he just needed to talk to somebody about money.
Well, Eric, I think that brings up a good point. And we started talking about that. When working with a certified financial planner, a CFP, our goal is not built around or centered around a product or a tool. It's centered around working with the individuals and helping them to talk through money, to be able to give them that advice when they want to, and by confirming their thoughts, giving them more confidence is what they're looking for.
It's not just confirming their thoughts. Oftentimes there's value in talking through an idea, that when we hear ourselves say something out loud to someone who has expertise in what we're talking about, they can provide counsel, they can provide pushback, they can ask the questions that you're not even thinking to ask. So I often tell, especially this is true of my business owner partners. I got a lot of clients who are business owners, and I'll often tell them, hey, one of the values of working with me is I am a thought partner. Like, what is that? I am a thought partner. I help you think through thoughtfully, think through wisely the financial decisions that you're trying to make. And if you make the financial decision, oftentimes you're making a better decision because you were able to talk it through, or you decide not to make that decision, which might have been the best decision because you realize, hey, there was maybe some that might have been one of those bad decisions, and I just got talked down from making a bad decision. I love the book of Proverbs. I think there's a lot of wisdom and ancient wisdom in the book of Proverbs in the Old Testament that deals with managing resources. Okay. And there's one particular verse that says, plans fail for lack of counsel, but with many advisors, they succeed. So plans fail for lack of counsel, but with many advisors, they succeed. So think about this. Most businesses have a board of directors. They have to. Right? Why? Because there's wisdom in the counsel of people, particularly from different backgrounds, advising on business decisions. So if we're not a publicly traded company or a big company, if we're a small, we own a small company, we should still have a board, an advisory board, so to speak, because we need people to thoughtfully think through big decisions. So there's wisdom in the counsel of many. And if you don't seek counsel, your plans will ultimately fail. So I tell people that's one of the biggest values. I mean, heck, a lot of my financial planning meetings recently with clients is helping them think through financial decisions. Now, of course, I get to bring in my expertise. I get to advise based off of the training that I have, understanding tax implications, understanding the time growth of money, understanding the trade-off of paying off a debt versus saving, or saving here versus saving there. So I get to bring that expertise and help people think through decisions and help lead them to make the right decision. Sometimes help tell them what the right decision is. But it's
So you're becoming more of a coach, through that thought partner, you become a coach. And I think as being a coach, you now you're helping them through their behavioral tendencies when it comes to finances.
Yeah. So that's a big part, behavioral coaching in making decisions. So this is another reason why people need to talk to someone about money. Is there have been multiple studies done. One of my favorite studies, I'm going to tell you why it's my favorite study. It's a Vanguard study, says that the average investor earns an additional 1 to 2% return on their investment accounts when they work with an advisor.
1 to 2%.
1 to 2. What I like about that is on the other side, Vanguard says, don't work with advisors. They cost too much money. They just charge fees, and you might as well just invest in the stock market and not pay a financial advisor. So I find it ironic that Vanguard, the same company that says, advisors are a waste of money, is the same company that comes out and says that an advisor can add 1 to 2%. Now, That might not sound a lot to you, but you compound 1 to 2% out over a 20, 30, 40-year investment life. That is a huge number. That if that's true, if I can help you make better decisions and help you manage your emotions and your financial behaviors over your lifetime, I am undercharging you when it's all said and done, if that's the case.
Right.
Now let's talk about a couple ways, or 3 or 4 ways, I think 4 ways here that that our behaviors get in the way and how a financial planner can help with that.
Mm-hmm.
So there's a couple different biases that we have. So for example, one is loss aversion, right? We don't like losing money. And what tends to happen is our risk tolerance, the amount of risk that we can tolerate, is very fickle. So when the environment is riskier, we become more averse to risk. And this is the same person. We're crazy. We're crazy. When the environment's less risky, we become risk takers. So risk tolerance is very fickle and it can change. So a financial advisor can help you stay true to your long-term goal to cut through some of those, the fickleness of that emotion, that fear of loss. So what I'm seeing now is clients, or not clients, but people who don't work closely with an advisor are moving all to cash, right? Because the stock market's volatile, and all of a sudden they've lost all their ability to absorb risk.
And Eric, I'm gonna, because now that you mentioned that, I'm gonna jump ahead to one of the other behavioral tendencies, and that's that herd mentality.
Yeah.
When we start talking about that and loss aversion, all too often people are having conversations with coworkers, with family members, with friends, and they're hearing what they've done and how they've pulled out. And because of that loss aversion in the markets, they're pulling out. They're going to cash.
Well, yeah, because everyone else is doing it. It's got to be safe, right? We're social. We're social creatures as humans. There's safety in numbers. So you know what? If everybody else is wrong and I'm wrong with them, there's some safety in that. I don't want everyone else to be wrong I want everyone else to be right, and then just be the lone guy who's wrong. That sucks. I'd rather just be safe with the herd. But it works on the flip side too, right? You're talking about from everyone's talking about recession. Oh my gosh, I'm scared. We got to go to cash because that's what everyone else is doing. I'm going to do that because there's some safety in that. Well, oh my gosh, the market's starting to recover. I'm going all in Ethereum. I'm going all in crypto. I'm going all in Tesla, right? Because that's what everyone else is doing, or everyone else in my cohort's doing that. So financial advisors can help moderate that behavior. Another one, and I'm seeing this a lot right now, is confirmation bias, and you may have heard it as echo chambers, right? We are seeking out information that confirms what we already tend to think, or what seems to be more consistent to validate our beliefs and opinions. And the way I'm seeing it a lot right now is in the political space. Your political party's out of favor, so therefore recession is just on the horizon. So I'm going to make a decision based off of that. And everything that I'm hearing or reading confirms that belief. Or your political party's in favor, and that makes you feel better, right? Because everything you're reading is going to confirm that opinion, that belief. And those are terrible. That's a terrible way to make financial decisions. And I'm seeing that a lot right now. So the final, well, let's call it behavior or bias, that I want to address really quick, and where a financial advisor can help. And again, we're referring back to that additional 1 to 2% over your lifetime return in your account. It's called recency bias. Now, recency bias is we're making decisions based off of maybe the most recent or traumatic information that we have. So it could be, recency bias could be, this particular stock just did really, really good last quarter. So, man, I'm going to get into that stock. So we're extrapolating that out into the future because it's got to continue. Or a big one, this is a little while ago, but it's maybe one of the most, I would say, vivid memories that I have of recency bias. If you were investing in the stock market in 2008 and 2009 during the Great Recession, and you were one of those unlucky, unfortunate people who gave in to loss aversion and herd mentality and went to cash, you took a really, 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 really long time to recover your losses. Okay. I remember having conversations with people in 2014 and 2015, and they were still talking about, they were still making investment decisions based off of 2008, 2009. And for the people who stayed invested, by and large, they were recovering depending on how they were invested. They were recovered by 2010, 2011.
Mm-hmm.
And yet, because that experience was so traumatic, that was the most recent piece of information in their mind. That's what they were making their decisions based off of.
Right. So out of those behavioral tendencies, what I'm gathering is working with an advisor is going to help you to cut through that noise. That advisor is going to
So
come back and that thought process, or partner.
The financial noise. So the
Right.
advisor is going to help you manage his emotions. But
Mm-hmm.
what we tend to do as humans, right? We want to validate what we're thinking. So what's the first thing we do today? I've got a financial question, or I'm thinking about something. What's the first thing I'm going to go do?
I'm going to reach out to my advisor.
No, I'm going to Google it.
Well, Google it.
Or I'm going to ask Siri, hey Siri, how much should I have in an emergency fund? Hey Siri, should I buy Ford? Hey Siri, I've been holding on to Tesla for 6 years. Is it time to sell it? Well, here's the problem with that is Google is going to give you a lot of conflicting data, right?
Right.
There's professionals out there, people who get paid a lot of money to give advice, and they have conflicting advice, mutually exclusive of each other, right? This and this can't be true at the same time. This economist says we're going into recession. This economist says, no, we're not going into recession. We're actually about to enter a bull market. Those are two mutually exclusive truths. One's right, one's wrong, or neither of them are right. Okay. That's what Google is going to return to you. So now you're the average person, you Google a financial question, and you're going to get 6 articles that are going to be the top first page, and they're going to be conflicting why you should do this and why you shouldn't do that, or whatever it might be. For example, I read an article this week. Susie Ormond came out and said that she has revised the amount that you should have in your emergency fund. She used to advocate for, I think, 8 months of expenses. And now she's saying you need to have 12 months of expenses in an emergency fund because we are going into recession and it's right around the corner.
Which is crazy.
Now, I don't know. It might be crazy. Wow. It might not be crazy. This is the problem. This is the problem with getting financial advice from Google. It's so prescriptive. This is what you should do. You don't know me. Susie doesn't know me. Do I have student loan debt?
It's a blanket response.
Is my income stable? Is my income variable? Do I have, have I been divorced 3 times and I've got 6 child support payments? Am I debt free? There's so many different variables that Google doesn't know your situation. They don't. So a financial advisor, a financial planner helps you cut through that noise and say, hey, look, I am now your financial Google. Don't Google it. Ask me the question. I know your situation. And I can give you, not only do I know your situation, I know your behavioral tendencies, because your profile and my profile might be the same, but I know you like to listen to everyone, at your kid's school, and you have a tendency to follow the herd. And I have a tendency maybe to be more independent. So the way I advise you might be a little bit different than the way I would advise someone who thinks like myself. That's what a financial advisor does. And that's one of the reasons you should hire someone, because you just need someone to talk to about money who knows you. You get me all fired up.
So Erik, how often do you get on the phone and talk to Google or Siri and ask them a question?
All the time. All the time.
So when I do it, I get probably 12 to 15 different links on different questions on there. So you got passionate about that, and that's why I had to ask that question. I could see it coming out, and it.
So hold on, let me back up. So I do it all the time, because if we go back to reason number 1, I'm one of those people who loves reading about personal finance. I'm one of those people who makes the time to make financial decisions for my situation. I'm one of those people who keeps up with the obviously, right? I'm a financial planner. I think everyone listen would expect me to. But when I need to make a big financial decision, there's usually 3 or 4 people that I'm talking it through with. You're one of them. I'm in another group with 6 or 7 other financial planners, and we're constantly saying, "Hey, what do you think about this situation?" So even as
I'm glad you went there.
advisors,
Right. And I'm glad you went there, because that's where I was going with this. One of the other reasons, for those that don't know, Erik and I actually started talking about partnering 10 years ago. It just took 8 years for us to actually do it. But we were still communicating and talking through ideas and with each other. I'd have a big financial situation or question coming up. I'd call Erik and talk him through it, or talk through it with him, and vice versa. We were each other's thought partners. Now, that doesn't mean that you're the only one I talk to. I have another group of individuals that I work with as well. But when we make those decisions, we are talking to other people.
Yeah. So let's kind of bring this and wrap this up nicely. Yeah. I'm not suggesting here that everyone needs to go out and hire a financial advisor. I think that most people will benefit from hiring a financial advisor, but I think that if your financial situation is complex, if you have a high income, there is a lot of wisdom in surrounding yourself with an expert who can help you make those financial decisions, from investing to business decisions. And another thing, a financial planner, oftentimes we act as, let's say, like quarterbacks, where we will bring in other experts who can go deeper than we can, whether it's a CPA,
attorneys, the CPAs,
or an attorney, or an insurance person. Your insurance knowledge is far, far more vast than mine. And I am regularly going to Xavier saying, "Hey, what would you do in this situation? I'm thinking about this. What would you do? Hey, this is what the client has. There's some problems with this policy. What do you think we should do to fix it?" So a financial expert's going to be able to, a financial planner is going to be able to bring in those expertise. And ultimately, at the end of the day, a financial advisor, their role, and this is something that separates you want to make sure, we can do a whole other episode on how to hire a financial advisor, but you really want to know how your financial advisor gets compensated.
Right.
That is something that is really important to understand. Do they get compensated by selling you something? There's nothing wrong with that. Okay.
That's going to be one of our next shows.
Or do they get compensated by giving you advice, by giving you financial counsel? It's two very different things. Right.
And again, I do want to close with one thing, Erik. I think hiring a financial planner shouldn't just be for that high net worth individual. There are individuals who are just getting started in their careers, or changing careers, that may not have a ton of money at that particular moment. But I think working with an advisor or a planner can help them as well to make wise decisions to help them to get to where they want to be, to attain those goals.
That's a big drive, Xavier, why I started the podcast and some of the other initiatives that we're working on, that we'll talk a little bit more about in months coming. Is we recognize that there is a large amount of financially illiterate people in this country, that finances are not taught in school, and people are making financial decisions without knowing what they're doing. So a big part of the podcast was recognizing that there's going to be a lot of people who aren't going to hire advisors, but if we can up their financial knowledge a little bit and help them make a better financial decision in one area, help them make one less bad shot, help them make one less bad decision, that fires me up. I feel like I am doing some social good by doing that, whether you hire me or not. And we're working on some video series regarding cash flow management. We're working on some video series to educate high schoolers about money, because most people may never hire me or you or somebody else, but we still want to equip and resource people with the tools to make good financial decisions.
So I asked you at the beginning of the show,
Mhm.
what is something about money you wish you would have known 20 years ago?
Yeah.
For me, I'm gonna answer that to close us out. I wish I would have known what an advisor or what a planner does, and having the ability to go out there, or having the accessibility to go out there and work with a planner or an advisor when I first came out of college. Even though I didn't have a lot of money, some of the decisions that I made back then, I probably wouldn't have
Yeah.
if I would have had a thought partner.
Well, Xavier, I wish you would have had this podcast episode when you first came out of college. So if you're listening and you know someone coming out of college, this is great information. Share this with them. Share this with your friends. Share us on social media if you'd be so kind. If you find this conversation valuable, but for all of our loyal listeners, those of you who tune in regularly, and I know who you are because I hear comments from various people regularly. Oh, I heard you say this on your podcast, and that makes a lot of sense. Hearing that fires me up and keeps me going, and it makes me want to continue to do what I'm doing here. So thanks for listening. Follow us wherever you get your podcasts and on social media. Xavier, take care, my friend.
Talk to you soon.